Welcome to Talk Tickers. Today, we're diving deep into the Q4 fiscal 2025 earnings call from Lantronix. That's ticker LTRX. Now, the market reaction to this one was, well, all over the place, and for a really good reason. Let's get into it.
Okay, so right off the bat, the headline numbers look kind of mixed. You see revenue at $28.84 million, which, hey, is a slight beat over what the street was expecting. But then you look at the bottom line, the non-GAAP earnings per share, and it's a penny, just a hair under the consensus. So a beat on top, a slight miss on the bottom. Pretty standard stuff, right? But believe me, this is not the real story.
And here it is. That's the number that sent shockwaves through the after-hours market. A 41% year-over-year drop in revenue. I mean, think about that. How can you beat estimates but have your revenue fall off a cliff by nearly half compared to last year? When you see a number like this, you know something big is happening under the hood.
So what on earth is going on here? That's the puzzle we're going to piece together. You've got these totally conflicting signals, and frankly, the market couldn't make up its mind either, with the stock just whipping back and forth. But if you listen to what management had to say, they have a very, very clear story they want to tell. And that story is all about a massive, deliberate transformation. Lantronix is basically shedding its old skin to grow a new one. That 41% decline? According to them, it wasn't a failure. It was more like a planned amputation.
To really get this, we've got to rewind the tape back to fiscal 2024. See, about a quarter of the company's entire revenue came from one single massive project with a customer called Gridspertise. Now, this was a huge deal, but it was also pretty low-margin business. And having that much of your business tied to one customer, well, that's always a risk.
And here's the punchline. That contract ran its course and rolled off. So that huge chunk of revenue, it just, poof, vanished. That 41% year-over-year drop is almost entirely because this one lumpy, low-margin project went away. And here's the kicker. If you strip that out, the company's core business actually started growing again from the previous quarter.
And you can see how management is framing this. The CEO, Sil Ammer, isn't making excuses for the revenue drop. He's basically taking a victory lap. He's calling it a turning point, a meaningful transformation. They're telling the market, we chose to do this. So what exactly is this new foundation they're so excited about?
All right, so if you're ripping out a quarter of your old business, you better have something good to replace it with, and Lantronix says they do. They're betting the farm on 3 new high-growth areas: defense drones, critical 5G gear, and what's called Edge AI.
First up, and this one's a really big deal, is defense. Lantronix is providing the brains, the mission-critical tech for the Black Widow drone. And this isn't just some random project. It's part of the U.S. Army's official reconnaissance program. That is a massive stamp of approval, and they've already started shipping. So what's this actually worth? Well, we're talking about roughly $500 of Lantronix tech inside every single one of these drones. Now, at that price, you don't have to sell a gazillion of them for this to become a really meaningful and, more importantly, a high-margin business.
So you might be asking, okay, why them? Why is Lantronix winning these huge defense deals? Well, it comes down to a few key things. They've got the tech chops, especially with cameras. But just as important, they have all the right security certifications, NDAA and TAA compliance. For critical defense projects, you can't just source this stuff from anywhere. Being a secure, North American supplier is a huge competitive advantage.
And check out the roadmap management laid out on the call. This year, fiscal 26, they see this drone business in the millions. But by fiscal 27, they're guiding for it to be 10 to 15% of the entire company's revenue. I mean, that's not just growth. That's a fundamental shift in what this company even is.
Okay, engine number 2 is a monster deal with a top-tier U.S. telecom carrier. They're shipping hardware to over 50,000 sites, which is huge. But the real magic here is the software that adds a layer of what investors love most: high-margin, sticky, annual recurring revenue. And get this, management hinted that this deal alone could potentially triple in size down the road.
And the third pillar is basically taking their core technology and pushing it into other cool commercial areas. They've partnered with Teledyne FLIR for thermal cameras on industrial drones, they've got new gear for private 5G networks, and they're even eyeing opportunities in robotics. So they're definitely not a one-trick pony.
Okay, great story, right? Defense, drones, 5G, it all sounds fantastic. But as investors, we have to ask, what does this actually mean for the numbers? Let's reframe the financials with this new strategy in mind.
And this, right here, is where the rubber meets the road, the guidance for next quarter.
Management is guiding for revenue that at the midpoint is actually higher than the quarter they just reported. This is the signal the market was looking for. It suggests the revenue bleed has stopped, the core business has bottomed, and growth is finally returning.
And it's not just about revenue growth, it's about profitable growth. By swapping out that low-margin Gridspertise work for these new higher-margin deals, and by moving some manufacturing out of China, they're now targeting a big recovery in gross margins, aiming for that 44 to 45% range. That's a much healthier business.
And do they have the financial muscle to pull all this off? It looks like it. They've got cash in the bank, they're actually generating cash from their operations, and they just refinanced their debt to push the due dates way out. They've got the stability and the runway they need to see this transition through.
All right, let's bring this all home. This is the next call, where we put it all together. Our core thesis on Lantronix, our rating on the stock, and a couple of interesting ways you might think about this company going forward.
So here's our take. Lantronix is a classic messy transition story. The headline numbers look awful, but the underlying quality of the business is actually getting way better. The market, for its part, is basically saying, okay, cool story, now prove it. Because of that balance between the big potential and the execution risk, we're rating the stock market perform.
Now, if you find the story intriguing, how could you think about it from a trading perspective? We've sketched out two pretty different angles here. One is a more aggressive bet on the drone narrative taking off, and the other is a more conservative play on that big carrier contract.
The first idea, the blue U.S. bull, is all about the market mispricing the company. The rationale is simple. Right now, investors see Lantronix as a boring old hardware company, not a cutting-edge defense tech player. If that perception changes as the drone revenue ramps up, the stock could get a serious re-rating. A potential way to play that is with a defined risk call spread.
The second idea is a bit different. We're calling it the carrier cash cow, and it's really for folks who might already own the stock and are willing to play the long game. The market can be slow to give companies credit for new recurring revenue streams. So this strategy is about getting paid to wait, using covered calls to generate income from your shares while that long-term story plays out.
And that really leaves us with the one big question that will define the next year for Lantronix. Fiscal 2025 was the reset year, no doubt about it. The question now is, can these new high-quality growth engines ramp up fast enough to convince Wall Street that this transformation is for real and turn this story into one of durable, profitable growth? That's what we'll be watching for on the next call. This is not financial advice.